Market's taken a little bit of a breather. I guess it's not surprising that it would. It's been an exhausting week for all of us. I know a lot of people who would like to see this week be over, but many people in the markets really don't, because it's been a great week if you've been long. And it's been a very broad-based rally. We've seen the Russell, originally was lifted by the big mega cap tech stocks, and that was, that's been the leadership more or less all year, all decade. But we did see participation in a broad range of sectors. We saw the Russell 2000 outperform yesterday. That's the sort of stuff that is market friendly, and if you want to think that the rally can be sustained. The market did sell off a little bit this morning. I think that was the normal effects of a post-Fed meeting hangover, as we related yesterday in our notes, and a little bit of just profit taking. You could see that today a little bit, because the profit taking seems to be, again, concentrated most to an extent that there is profit taking, really. That's concentrated most in the big cap tech stocks again. So, all in all, it's a very positive setup for the market. Now, this doesn't mean that all's rosy. The employment number today, while certainly impressing on the unemployment numbers and while having better than expected payrolls data, it's not the mark of a strong economy, although it is moving in the right direction. I do think it's a little weird that the unemployment number dropped so much. It kind of makes me think people are leaving the workforce. And we're hopefully getting some clarity on the election front. I don't think this necessarily, the latest developments, I'm not going to speak politically, I'm speaking from a market point of view. I don't think it necessarily adds to the level of clarity that people want. I think markets have expressed their happiness in a divided government, their happiness in that a divided government will probably not lead to higher taxes. And again, markets are not good at politics, but they're pretty good at politics when it affects the bottom line of companies and people. And that's where the tax issue comes in. I think you've taken that capital gains tax fear off the table. I think you've taken a reversion to higher corporate tax rates off the table, at least in the short term. The Senate, it would take a lot, I think, for the Senate to actually go Democratic at this point. It would basically take two runoffs in Georgia, and those tend not to, we'll see how that goes. But that's a low probability bet at this point, if that's what you're betting on. But what it also means is I don't think that we've seen the end of back and forth legal wrangling. Do bear in mind that markets did not perform well during the Bush-Gore situation in 2000. Now, that was arguably at the precipice of a recession that began a few months later. You can also say, though, that right now we're not exactly in the healthiest of economies either. The status for stimulus remains unsettled. That certainly, I've heard people try to say that somehow this divided election means there's a greater hope of stimulus in the short term. I really don't see it. But these are the sort of things. These are the sort of things the markets will think about. Right now, it's happy time. And, if there's a way to interpret news right now, it's being interpreted as bullish for whatever you own, for whatever stocks you have. We'll see how that persists. Now, the one thing to keep in mind before we declare this an all-out party is the VIX remains high. Now, it's well off the levels we saw about a week ago, but that was when spot VIX touched 40. That's an extraordinarily high level, rarely sustainable. But when we've settled back now, it's into the 26 level, which is still historically high. And the other thing to keep in mind is VIX futures are telling you a story that tells you that markets are still expecting some sort of volatility. I think the latest political developments do not make that volatility fear recede dramatically. But as I'm taping this now, we've got a spot VIX of a little over 26. November futures about 26.70. And then into December and January, we're looking at just about 28. These are markets that are telling you we're going to get some volatility back and forth. Now, when you have 2% moves every day, that means you're going to have a relatively high level of the VIX. It's math. Go back to the stuff I've written about Rule of 16 to explain it to you. But the bottom line is if you move 2% a day, that implies a 32 volatility. Just does. And so that's the sort of thing that you may say, well, okay, where's VIX going to go? But you would expect to see VIX sort of tail off. And I think the fact that it's still high through November, through December, through January, I think is one of those situations that's making people say, all right, I'm going to be long the market, but I'm going to have, I'm going to know where my hedge is. And that's okay. But these are the situations we're dealing with. So, do I think the market's waving the all clear? Well, it certainly seemed that way for a bit this week. VIX is telling you a lot of people are not saying it's all clear. Markets climb a wall of worry. There's going to be a lot of moving parts over the next few weeks, unfortunately or fortunately, depending on how you want to look at it. And I think we got to stay tuned. Right now, the trend is your friend. You kind of be getting in the way of a freight train. And so you have to, when you have something like that happening, you either say, I'm going to jump on and go for the ride and see where it ends, or I'm going to stay to the sidelines and just, take a look and go. It's tough. It's a tough tape to fight right now if that's your inclination. All right, everybody, have a good weekend. Get some sleep. I think we all need it. And we'll talk again on Monday. Take care. Bye-bye.